Hey everybody, it's Hari Swaminathan. Monday evening around 9 p.m., October 7th. I'm looking at BlackBerry. Now, this is not a regular trade that we do. Okay, so I need to make it very, very clear. This is a highly speculative trade, and you would only take this trade if you're willing to lose everything that you spend on it. But that's not going to be a whole lot. So let me explain. BlackBerry is in play. So last week, this private equity firm came and offered $9. Since then, the price has actually gone down. Now today it's gone up. In a weak market, it's gone up. And why has it gone up? That's because now Google, SAP, Cisco, all these people have started expressing interest in BlackBerry. And that's because BlackBerry owns a lot of intellectual property. So even if you break the company up into pieces, the sum of the parts is going to be much more valuable than the whole. So that's really the philosophy of BlackBerry. And so over the next, I think, 30 to 40 days, something is going to happen with BlackBerry, and it's probably going to it's going to get into a bidding war because the private equity company has offered $9 a share last week. And obviously now, because you have these technology bigwigs like Cisco and Google and all these players interested in BlackBerry, something might happen. And you can see, today it popped up 28 cents. That's pretty good. That's almost, 4% today. So I think something big could happen to BlackBerry, which is one of these big tech guys comes in and makes a bid, perhaps at 10, because see, now $9 is the floor, because that's what the private equity company has already offered. So any meaningful offer has to be higher than that. So let's say $10. Okay, let's say if Google comes and offers $10, you can. And so so the play I'm looking at is in November, and we got 39 days, and you can see the 9 call is going for about 23 cents right here. So if we were to buy, or if anybody, I mean, of course, everybody chooses their own contracts, and bear in mind, this is a highly speculative play. So, you could lose everything. So, but let's see this. If we buy 50 contracts in my example of the 9 call November, we pay about 23 cents. Uh, that's the mid price. So for 50 contracts, that's 5,000 shares. We're paying 1150, 1,150. Now, what would happen if BlackBerry went to $10, let's say? So if it went to $10, that would be a couple of dollars in the money. So perhaps it'll be somewhere near where the 6 strike price is. So, we're looking at almost 10 times the value of this option. So, from 23 cents, it could go up anywhere from 8 to 10 times. So an investment of 1150 could potentially yield about $10,000, $11,000. So, it's a speculative play. It's highly speculative. So, obviously, anybody that takes it is, you're out there on your own. If it works, it'll work fantastic. And if it doesn't, you might lose it all. But the good thing is you may not lose all of it, because let's say, we've got 39 days to expiry. Let's say 25 or 20 or 25 days go by and it doesn't seem like there's, some kind of a nice deal going on, or deal, going to happen. I think you should be able to capture at least 10 cents out of this 23 cents. So, you're probably not going to lose all of it if you give it up at some point, if you don't think there's a deal happening. But I think BlackBerry is in play. So, if you wanted to do a speculative trade, this could be something that you would do. I'm just going to put it for fun, just like we did, I think last month I did a trade on Google like that. So it's a highly speculative trade. I'm just going to put it and see how it goes. Thanks.